On today's First Time Buyer channel, we are going to talk about how interest rates affect your mortgage payment. Hi, welcome back. Enrique here with First West Financial in California. And today we're going to be talking about a very hot topic. We're going to be talking about mortgage rates. So if you are a first-time buyer, if you're thinking about buying a home, if you are in the market to buy a home, or you know someone who's in the market to buy a home, or even if you're a realtor, this is going to be very, very, very useful information because there's a lot of myths, a lot of misinformation about mortgage rates. So before we get started, don't forget to hit subscribe. We have great information here in the First Time Buyer channel that we want to share with you. We want to tell you all about mortgages. If you are in that journey that can be really scary, we're going to be here for you. We're going to hold your hand. We're going to walk you through the process. Whether you use us as a mortgage broker or not, I think this information is going to be very useful. So today we're going to talk about mortgage rates. People call me all the time, Enrique, how do I get the best mortgage rate? Or hey, what kind of interest rate am I going to get? Or how do I determine the payment? What interest are you going to give me? So we're going to talk about all that. The first thing you need to know is that mortgage rates are not the same for everybody. Unfortunately, it's not a democracy when it comes to mortgage rates. Mortgage rates are determined by 11 or 12 different factors. First of all, who you're doing business with matters. There are banks that are more expensive than brokers. Brokers tend to have the lowest available rates. So that's one place to start. You want low rates, you got to start with an independent mortgage broker that can shop around for you. But there's other factors. Your credit score, your income, where the house is located in terms of the state or the county will determine the type of interest rate, if it's a jumbo loan or a conforming loan. The type of program, is it a government loan, FHA? Is it a USDA? Are you a veteran? Is it a conventional? The down payment, how much money are you going to put into the house? Some people, put more money down, they get a better interest rate. Are you going to want your taxes and your insurance included in the payment or not? Are you a first-time buyer or not? Are you going to need mortgage insurance or not? Every single one of those factors matters when it comes to interest rates. Also, are you interested in paying discount points or fees to lower the rate? So as you can already imagine, this can be a very, very complicated issue. So walking through this process with a mortgage broker is important. You have to work with somebody you can trust, someone that is going to walk you through the process and hold your hand and tell you how things work and what is best for you, not what is best for the lender. So that's how we are going to start. We're going to talk about the fact that not all mortgage rates are the same. Now, how does it affect your payment? Well, it is no secret that the higher the mortgage rate, the higher the payment is going to be. Now, a lot of people ask me, does it make a big difference? Well, it can. Sometimes it doesn't make a big difference when you first look at it. So for example, if you have a 3.25% rate, which is 3.25 on a $300,000 loan, and then somebody offers you a 3.125, maybe the payment is going to be very small difference, $20, $30. So sometimes it's imperceptible. And if they're going to make you pay fees to get that rate, it doesn't make sense. But I have been pricing loans sometimes against some of my competitors that are 0.5% or more, sometimes almost a percentage point. So over the life of the loan, these people are going to pay $20,000, $30,000 more for choosing the wrong rate. So getting the lowest rate matters, but also getting the correct loan matters. Recently I talked to someone who was talking to another lender, and that lender had talked him into a very specific loan that had a decent rate. Well, we found out that it moved him into a different program. Even though the rate went up 0.1%, the payment dropped because the mortgage insurance was better. So this person ended up saving almost $100 a month versus going with the other one. So the interest rate is important and it matters, but in some cases it's not the most important thing. Now, when we are calculating mortgage payments, the interest rate is going to determine how much of a house you can afford. So if you're very wealthy and you have lots of income and you have no debt and you make lots and lots of money and you're buying a modest house, well, it's not going to make a big difference. You're going to qualify whether you qualify for 3.25 or 3.75 or 2.5. You're going to buy the house. But if you are buying a home for the first time and your lender tells you that your ratios are a little tight, maybe you have a little bit of debt, student loans, a car payment, and maybe you are not making as much money as you will in the future, well, having an interest rate that is lower is going to help you to be able to afford more home. We find right now, for example, that we're qualifying people because the interest rates are very, very low this summer. We can afford to qualify people for more house than they would have a year ago. So a year ago, a person could have qualified for $350,000, and right now they may qualify for $375,000 or $400,000 just because the interest rates are lower. So what I want to share with you is that it matters your interest rate, but it also matters understanding the entire concept, the entire process, right? So having a better interest rate is going to affect your payment positively. The other thing you have to be careful is we're going to talk about mortgage insurance in a different chapter. Always ask your lender, how much is my mortgage insurance? If you're not putting a full 20% down, chances are you're going to pay mortgage insurance. Most first-time buyers do. So make sure that you're taking that into account when you are determining your payment. For example, right now we do business with some banks that have the lowest mortgage insurance in the country. So not only is the interest rate low, but it saves you money on the mortgage insurance. Those things are important. So as you can see, there's a lot of moving parts. And sometimes when we do these videos, we talk about topics that create more questions than answers. But I know that today I probably gave you a pretty good insight on what are mortgage rates, how are they determined, and how can you navigate this mortgage rate uncertainty. The important thing is that you give us a call if you have more questions. We'll be happy to talk to you about it. If you already got a quote from someone, maybe you already have an estimate, it's worth having someone take a second look to see if there's any fees or anything that you can improve on. Or maybe you're in the wrong program. We'll be happy to point you in the right direction. Even if we cannot help you, we're going to give you some decent advice. We're always here to help first-time buyers. First-time buyers, it's a big part of what we do here at First West Financial. Me and my team, we are dedicated to hold your hand, to walk you through the process, to make it simple, to make it easy. We know that it can be complicated. You don't need to be a mortgage broker. You just have to know someone like me that can help you through this process. I hope you have a great day. Don't forget to hit subscribe and come back and see us here at the First Time Buyer channel. Have a great day.